Most people think they understand health insurance until they actually need to use it. You walk into a hospital thinking, I'm insured. I'll pay a little and leave. Instead, you get a bill that makes you question reality. Deductible, copay, coinsurance. 3 words. 1 system. Maximum confusion. Today, we're finally going to clear this up, once and for all, using plain English, real numbers, and zero insurance fluff. By the end of this video, you'll know exactly what you pay, when you pay it, and how insurers quietly make money off confusion. Why this matters more than you think. This isn't just about definitions. Misunderstanding these 3 terms is the reason people avoid doctors, delay treatment, or get blindsided by massive medical bills. Insurance companies don't benefit from clarity. You do. So let's break the system down piece by piece. Part 1. What is a deductible? Let's start with the deductible, because this is the foundation. Your deductible is the amount you must pay every year before your insurance starts sharing the cost. Think of it like a paywall. Example, your annual deductible equals $2,000. You go to the hospital. First $2,000 of eligible medical expenses? That's entirely on you. Insurance pays nothing during this phase. Once you've paid that $2,000, you've met your deductible. Important detail most people miss. Deductibles reset every year. January 1st, back to zero. That's why January is peak profit season for insurers. Deductible reality check. Here's the trap. People think, I have insurance, so I'm covered. But until you hit your deductible, you're basically self-insured. Insurance only activates after you've already spent thousands. Now here's where it gets interesting. Part 2. What is a copay? A copay is a fixed amount you pay for specific services. Example, $25 to visit a primary care doctor, $50 for a specialist, $15 for a prescription. The key word is fixed. Whether the doctor charges $100 or $500, your copay stays the same. Sounds good, right? Here's the catch. Copays often don't count toward your deductible. They may count toward your out-of-pocket maximum. Translation: copays feel small, but they quietly stack up. Why copays exist? Copays exist for one reason: behavior control. Insurance companies want you to think twice before seeing a doctor. Avoid unnecessary visits. Pay something every time. It's not about fairness. It's about usage, management. Part 3. What is coinsurance? Now the most misunderstood term, coinsurance. Coinsurance is a percentage split between you and the insurer after you meet your deductible. Example, coinsurance equals 20%. Insurance pays 80%. You pay 20%. Let's put real numbers on it. You've met your $2,000 deductible. You get a medical bill for $10,000. Insurance pays 80% equals $8,000. You pay 20% equals $2,000. That's coinsurance. Notice something? Even with insurance, big bills still hurt. The silent killer, out-of-pocket maximum. This is the part that saves you, eventually. Your out-of-pocket maximum is the absolute most you'll pay in a year. It includes deductible, coinsurance, some copays. Once you hit this number, insurance covers 100% of eligible costs. But here's the reality. Most people never plan around this number until it's too late. Putting it all together, one simple timeline. Let's simplify the entire system. Phase 1. Deductible zone. You pay everything. Insurance watches. Phase 2. Coinsurance zone. Costs are shared. You still pay a percentage. Phase 3. Out-of-pocket max. Insurance pays everything. You finally breathe. Copays exist along the way, quietly draining your wallet. This isn't accidental. It's engineered complexity. How to use this knowledge. Here's what smart people actually do. Know your deductible. Know your coinsurance percentage. Know your out-of-pocket max. Plan medical procedures strategically within the year. Never assume insurance equals cheap. If this video saved you even one surprise bill, hit like. If you want more content that explains money systems the way they actually work, subscribe. Because the system profits from confusion, clarity is your advantage.